Portfolio Builder members, happy Friday. Hope everyone had a fun Halloween, passing out candy and is staying warm. Just a comical cartoon here, considering the stock market has jumped to all-time highs. And don't forget, who told you the SPY was headed towards 315 for weeks now? Now, a lot of you thought maybe it was not possible, but here we are sitting at record highs today on a strong jobs print. Let's take a look at our results. Now, unfortunately, we had to give back $1.82 of the $2.74 profit we would have made on the SPY. We walked away with 92 cents a share. And the good news is we had extreme precaution and protection in case stocks had dipped down lower. There was two reports today, a bounce in the ISM and then a strong jobs number. So these restaurants are hiring like wildfire right now and continuing to support the expansion of this business cycle. So we made in the last 48 hours a $1,564 profit. And let's see who we have live. Ernest, good morning. Today's update will start off by reviewing the current trade alert. And Ernest, I do want you to know you're one of our lifetime members, so you have a free trial in the boot camp. I have a great trade alert coming out after the live stream for our boot camp folks, and it fits into our total strategy. So it's really just a nice add-on. And this is a volatility play that can return 1,000% if something goes haywire in the markets and we get a volatility quake. So you'll see that coming out after the live stream. So let's take a look at the trade alert today. 92-cent profit per share on the SPY with extreme precaution using a tight collar. Even though I do expect the SPY to travel up to the 315 to 330 range as this positive trade deal narrative continues to flow through the media, I still want to play it extra safe. We're in a bubble and we're at record highs. And it's not just a stock bubble, it's also a bond bubble. And so we have to play it very careful right now. Otherwise, we risk giving up all the gains we've carefully collected over the past 11 months. Blowout jobs number, adjusted for revisions in the General Motors strike, 303,000 added. This is far greater than expected. USA rocks. Our return in November is still flat. TLT did pull back a little bit, but remember, that's the goal. SPY wins, TLT just trades flat, slightly down. Overall, they're both going up because we understand the big picture. I've updated our returns per month now that we closed out October, and proud to say we've generated a profit in 10 of the last 11 months. Notably, during the 20% pullback in equity prices in December, we had a 1% return. January, February, 2.2, 1.7. Sure, we underperformed the stock market, but that's not our goal. Our goal is to preserve capital and to generate a return in all market conditions. March, April, May, and June, we walked away with better returns than normal. Again, our goal is to hit a 1% target. Those months we ranged between 1.2 and as high as 3.2. And I do want to note that during May, when you were wondering if it's another December crash or if it's just a shorter crash, S&P 500 did fall about 7%. We made 2.2. Now in July, we had our only loss, although I will point out the S&P 500 was down 2% that same month. We had a 1% loss, and this was, again, being a little early in predicting a potential trade war escalation. They said everything was grand. We have a farm deal coming in July after walking away from the G20 summit in Osaka. But that was a bunch of baloney. Come August, surprise, we've got some new tariffs for you guys to start off in Christmas time. And that actually generated a healthy profit for the portfolio, 1.8. September market went nowhere, 0.3%. Now in October, we got that surprise phase one trade deal announcement, which again we had in July and we've had many times before. And the market rallied on this news, up 5%. and we squeaked out a 0.3% return. Here's our current trade allocation. This is a 50% equities, 40% bond, 10% gold portfolio. And this breaks down to 100 shares of SPY Monday, Wednesday, Friday at noon Eastern, 200 shares of emerging markets on Tuesday, which is also up today considerably, 200 shares of the TLT on Thursday, and then a buy and hold position in GDX. That's the gold miners. Target return is $750 a month per 75,000 invested. Good morning, Ron. How's it going? Here's the text message we did send out to our clients. Buy to close the November 1st, 2019 304 SPY call and allow the November 1st, 2019 302 SPY put to expire worthless. It's worth a penny. Nobody wants it, so we can't get any money out of it. Then meanwhile, the new trade is to push these strikes up yet another $1 higher. In fact, $2 higher on the, or rather $3, my apologies. So we're selling the 307 SPY call and then purchasing the 305 put. And the effect of this is the second we get a sell-off and some profit taking on the SPY, our put options are going to kick in. We're going to limit any downside risk dramatically on the SPY and be able to catch a nice win on our TLT. So we'll take a look at what could possibly go wrong to cause a sell-off in the SPY in a moment. Here's how to close out the previous trade if you took it buy to close. The new trade again is to sell to open that 307 call and then to buy to open the 305 put. Our potential profit is $1.15 per share, and I've invested in a pretty expensive put, so our maximum risk is only 84 cents a share. So ideally, between now and Monday, people take some profits on this elevated SPY, spike up our TLT, and we can start off November with a nice gain overall. Now, if this trend continues, the SPY will deliver us a potential $1.15 per share. And I don't expect the TLT to have much volatility because we do have the Powell put supporting the bond market. Jump into our topical news now. Here's a look at that gorgeous SPY chart, which we have been long for quite some time, telling everybody our target, and we are now approaching it at rapid pace. My expectation is with the dovish Fed, check. With the strong economy, check. With the deficit from the government, check. That we're going to have strong numbers and push the SPY up to 315 to 330 with the phase one trade deal. The narrative continues that this is on track in the next 2 weeks. So if all this happens, we do need to worry a little bit about downside risks on the TLT and GDX. So we will be preparing for that as we get closer and closer to the supposed signing date. Emerging markets also rallying up. Nearly a 10% gain for emerging markets in the last month since we've been long around the 10th. So we've caught most of that gain, providing great returns. Key assets in the emerging market are Tencent, Alibaba. So these are two of the most profitable companies in the world. They're ranked in the top 10 of public traded companies. And this ETF provides 1,000 different companies to our portfolio. So it's an important smaller addition to our strategy. And as long as this peaceful narrative between US and China is undergoing, we want to be long emerging markets and the SPY at the same time for greater diversification. Okay, TLT has had a bit of a sell-off, but not a whole lot when you compare it to how strong of an equity rally we've had. So that shows that the bond market's not quite buying this economic recovery, or that we're really truly at the end of a global slowdown. So they are clearly saying that we need more central bank intervention, which is already under play. GDX is the gold miner ETF, and we're looking at the 2010 through 2012 period as what we're aiming for to achieve with GDX, potentially much larger if the trade war does escalate and causes more tensions and disruptions to trade route. The Chinese are trying to tighten up that conversion rate on their, or exchange rate on their currency. And part of this phase one trade deal is supposedly to peg their exchange rates so that we can spank the Chinese with tariffs, and they won't offset those tariffs with just devaluing their currency. So that's been their move for the past 2 years, is as we layer on the tariffs, they are simply devaluing their currency. So we'll see if that really becomes part of the deal and if they will actually abide by the deal they sign. And we've seen them sign or agree to plenty of deals over the last 3 decades and then not follow them at all. Morning, Tom. How's it going? German yields on the 30-year popping above 0. So is this really a recovery? Is China really coming out of its slump? Or is this just a little relief rally? I think with a little pressure from the U.S., it would clearly send China into a spiral. So this phase one trade deal and what exactly is involved in it and when phase two starts will become more and more important as the days progress here. Here's your 30-year treasury, again following the same path as the German. Here's that spot gold at 1,500, very elevated. If we really get a phase one trade deal, and it looks like all this economic data is really starting to improve, we got to start to worry if the central banks are all going to pause on rate cuts and stimulus. So I think we're at least 5 to 6 months away from them actually potentially considering that, and that would be with everything going the right way. We still need economic improvement in China primarily. We would need to see this impeachment fear not turn into a fiasco, which it very well may. And then we need this phase one and even the phase two deal to look like it's making smooth progress towards a real resolution. So if we start to see all of those coming together at once, we're going to quickly abandon ship on gold and probably play the downside on the TLT. So we'll take a look at that in our next webinar in more detail. But I do think that is very wishful thinking for all of that to occur. Crude, again, between 50 and 70. I'm not concerned. Below 50, we got to get worried about stocks. Above 70, first we got to get worried about the TLT, as that would insinuate that there's inflation ahead. Dollar index remains strong even after 3 rate cuts, $200 billion in adjustments to the balance sheet, and this repo madness continues, $75 billion overnight today. And so this just indicates that the emerging markets are still struggling and that most likely this global slowdown is not over yet, despite a lot of numbers coming out. Bitcoin and Ethereum I throw into the exact same bag as gold, whether we want to be long or short. At this point in time, I'm still confident we should be long, but the data and news flow is getting relatively stronger, and you can see that, of course, in the S&P 500 price. We already read that tweet. Here's where the October jobs were, those amazing restaurant jobs. You can see manufacturing continues to shed massive amounts of high-paying jobs, and they're being replaced with waiters and waitresses. So that's not the end of the world, but it's not the best news. Here's that restaurant job growth. Bloomberg headline. Nomura, this is the big Japanese bank where Charles McElliott works for, one of the tech analysis guys. CTA flows is his specialty. I like to listen to them. We believe Beijing's policy room has been much more limited than in previous easing cycles due to the surging debt. Bingo, this is the key statement in modern finance. Here's that Chinese credit impulse. So we're seeing the U.S. start to spike up its credit. We're seeing the euro zone start to spike up their credit. Almost every emerging market central bank is lowering rates. China has lowered rates, but are they going to inject more capital into their banking system? So that is what we're really carefully watching. And you got to ask, are they trying to potentially cause a global slowdown to apply pressure in these negotiations with Trump? So if we start to see this pick up, we can get even more bullish on equities. U.S. consumers are still fine. Average hourly earnings continue to rise. This places pressure on inflation metrics, which again, that's what can ruin the party for first the bond market and then the stock market. Now there's a whole report out about the discrepancy between the Chinese data, official data, and a third-party source. And you can see this huge discrepancy in the PMI, one printing below 50 and the other popping above. So questionable as always from China. Just yesterday we saw Germany's exports had tumbled for the first time since the 2008 crash or something like that. Alibaba reports huge 40% gain in revenue year over year. Again, that's the company we primarily hold in emerging market ETF. Beijing plans $4 billion asset sale to punch yuan shorts in the nose. So if we do see a substantial sell-off in the dollar against the yuan, and then we start to see the phase 1 or phase 2 trade deal get in trouble and the threats of tariffs, that will be one of our boot camp trades to short their currency. It's a good thing we waited on that to see how this all plays out. Meanwhile, China Foreign Ministry says speculation of a meeting of Chinese and U.S. leaders in Macau is pure speculation. And you got to ask, if they really thought there's a potential impeachment risk for Trump, are they going to sign a deal right now and give him a win? Or are they going to drag their feet? So the next 2 weeks could get very, very exciting. But all the U.S. trade representatives, even Wilbur Ross, who never says anything positive, seems to think that a deal is going to happen. Now, we thought this many times before, and they go strike out a bunch of lines in it at the last second and then cause Trump to get upset. So we'll have to see. Here's Kyle Bass. He's been wanting to short the Hong Kong currency for probably a couple years now. And to replace the $20 billion of capital that's left Hong Kong in August, the Chinese Communist Party propped it up with massive southbound flows. So he's been trying to short that currency, which they keep at a very strict peg. There's been easier money to make shorting the Chinese currency, but he thinks that the Hong Kong situation and that exchange rate is not something they can keep up for long, and has been on the record for a good year now that he's trading a strategy to short that. Now, the nice thing about trading that currency exchange rate is they don't try to tighten it. They just try to keep it flat. So you won't lose a whole lot of money betting on the short side with the futures market on that currency. So we may consider jumping on that bandwagon in the boot camp program as well when we start to see things heat up once again. But we're clearly, as predicted, in a short-term period of peace in the trade war. White House advisor Kudlow: enormous progress is being made on intellectual property theft issue, but not completed. Some progress on forced transfer of technology, but will probably slip into phase 2 of the China deal. So it looks like they potentially have not made it law in China that these issues will be punished, but instead they're just going to use the tariff stick to punish the whole Chinese country if they break this agreement. So that's interesting. Now I'm just reading between the lines. No one has a copy of what exactly this agreement is. It's been very vague. McConnell, Senate Democrats just voted to filibuster the annual funding for the U.S. Armed Forces. It's the second time they have blocked defense funding in 2 months. We can't advance it. Nothing will piss off McConnell like holding back some military funding. So, remember when the Democrats said their impeachment obsession wouldn't stop them from legislation? And he's pointing out that this funding actually is sending some $200 million to Ukraine, which is exactly what their new impeachment case all revolves around, withholding funding to Ukraine. So now they are, now he's pointing out that they are doing the same thing inadvertently. This is the journalist who you want to study if you want the inside scoop on what's going on in Ukraine. He's published a lot of stuff for several years on it, and it dates all the way back to really 2014. So there's a ton of content on this. Our bootcamp members are going to get a special release today. It's our daily dump. This will take you all weekend if you really want to watch it all. It's really good content. I'll give you multiple sources. They all tie in. It's going to seem like a bunch of random stories I've collected for you and different qualified and respected sources. But once you watch it all, you'll see how all of this ties together. Too much to cover in this little update video. But the bottom line is this whole Ukraine scandal may get extremely ugly in the next few months if it does progress. And so we'll keep a close eye on that. It's going to be an exciting election to say the least. But if you do watch the daily dump coming out to our bootcamp folks, you have a ton of content to study, probably about 11 hours worth of content, spread out between 5 really good videos. The political parties and the media have abandoned the working middle class. So we're talking about what could cause our long bond, long stock strategy to implode. It's inflation. Well, what's interesting about the most recent Fed speech that I really picked up on is that they are working on a secret plan to force inflation that they plan to roll out within 6 months. And it sounds like it's going to be some sort of modern money theory where instead of giving the money to the banks and letting it flow down based on credit, they're looking at ways to force inflation by trying to go from the bottom up. It sounds like they were very vague once again. But it does sound like they want to get some inflation, and they're having a hard time with that, at least with the way they measure inflation. We all know that the things that are going up, the most important costs, are skyrocketing, like medical and real estate. UBS admits that Trump was actually right in that U.S. consumers aren't paying for the trade war. At first, U.S. President Trump's trade taxes, tariffs, were mainly paid by Americans. In recent months, trade data shows that more and more supply chains have shifted. Now, this creates a very domino effect on the Chinese economy that I think is going to continue to hurt their GDP numbers in upcoming months and continue this long bond strategy. And potentially, we could see something like 2018 once again, where emerging markets start to hurt and the U.S. stocks still go up. So we'll see if that develops or not. Trump administration to release Giuliani Ukraine communications. So your daily dump today has a ton of information about what exactly Rudy's been up to and when he already turned in all these documents to the head of state and they did nothing with it. So they already have all this information. That's actually when this whole impeachment inquiry began, is right after he turned in all of the testimony he went and collected in Ukraine. And Pelosi begins the political death march as impeachment resolution offers few answers. Now, what is this all about? I think that they have been caught doing a lot of illegal activity in Ukraine. And now instead of their reaction is try to discredit the sources that are making these claims. And so just trying to distract everyone from what really happened. Quick little slide about our program, and then we'll check out any questions and then get our Bootcamp Trade Alert coming out. So if you are a lifetime member, you will be getting our Bootcamp Trade Alert every Friday. And again, this is a volatility play that can generate a very large return, but we got to use tiny amounts of capital and slowly build into this position. Daily income trade alerts at noon Eastern, Monday through Friday. Our goal is to generate a 1% return with very little risk. And you can see we've done that consistently no matter what the U.S. stock market has done. Check out December's 20% drawdown. We returned 1%. Check out May's 7% drawdown. We returned 2.2%. And check out August's 7% crash. We delivered 1.8%. We've reviewed this, but this slide I will leave up. If you want to trade with less capital or less work, you can follow the Tuesday-Thursday trade and have a very similar risk profile. Our simple 4 ETF portfolio is extremely diversified and all you'll need for your retirement. Income and safety, not growth or speculation. Simplify your holdings, reduce your risk, get better results with less work, and weatherproof your retirement portfolio. And attention non-members, we have an offer of the week that we are going to extend through today to get a 40% discount on our annual membership. Now that's normally $5,000 a year, but if you call Dean right now at 505-322-7515, we'll sneak you in at a discounted rate. And for members who haven't upgraded to a lifetime deal yet, call Dean. Let's stop your annual bills, and you're going to get 4 weeks free as a bonus in our boot camp right when you join a lifetime membership. So that's 505-322-7515. Reminder, we have our paid-only webinar at 2 Eastern Wednesday. Our first boot camp Q&A webinar is this Monday, where we're going to cover the daily dump that's releasing today and the trade alert. The first lecture is not this Tuesday, but the next Tuesday. So look for your email this evening with the daily dump, and that has a bunch of YouTube videos to study, as well as our complete schedule for all the webinars. All right, guys, so thank you so much. We'll be getting that bonus trade alert out to bootcamp members in a few minutes, and then your daily dump shortly after that. You'll be getting webinar invites for all of that bootcamp related content, and then Monday we will be back to trading the SPY. So I hope everybody has a great weekend, and if you're ready to get started with a real deal membership, call Dean 505-322-7515.